Exhaustion gap for stocks, it is possible because market breadth is extremely overbought and the pullback is actually quite likely. We just need to know to which price levels that pullback will unfold. We'll look over an example trade, Boeing, which is up over 20%, 23%. I personally have a position open. We'll also look at dollar, which appears ready for a bounce, and gold might finally take advantage of that, or rather the other way around. Dollar might take advantage of the gold being overextended, and gold might pull back about 8% or more. There's a possibility of that. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, July 4th. Happy 4th of July holiday for the United States. Please help promote this channel, like, share, and comment on this video. If you're a subscriber, stay tuned. We'll be covering separately market breadths, junk debt, treasury bonds, interest rates, Bitcoin, crude oil, New Zealand, Australian dollars, as well as various ETFs, large cap stocks, speculative securities, some of the newer names such as SolarEdge, Shoals Technology, Orchid Island Capital. Estee Lauder came up on the scan recently, and as well as some of the gold-related securities. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, for which you can sign up on my site by following the description of the video. We're currently looking at the S&P 500 on the daily time frame. So each candlestick, each one of those funny-looking green and red things, bars, is 1 day's worth of activity. So we just gapped to a new all-time high on between Wednesday and Thursday. Today is Friday, and July 4th. There is no trading in the United States, so this gap occurred yesterday in the morning. We continued higher throughout the day. We closed near the records. Very small amount of selling at the very end of the day. But by and large, clearly an extremely powerful move from the lows in April, on April 7th of this year, till today. We have moved 29%, so over 29%, actually close to 30%. So very strong move, obviously. We are in a bull market. Bull market in my book is defined, these are my indicators. You can see this green, blue, red, and yellow line. So whenever a security closes above this blue support resistance line, that means we're in a bull market. So the bull market, according to my system, started on Friday, 2nd of May 2025, this year. And since then, we pretty much advanced non-stop higher and higher. Now notice on this chart we have no less than 5 gaps that I can see. One between April 22nd, 23rd. There's a small partial gap here between April 30th and May 1st, but it has been filled more or less on 7th of May, so I'm not going to count it. There is a gap between 9th of May and 12th of May, another small gap here between 23rd of May and 25th of May. This gap actually, just based on my previous experience and reading of the charts, this might be a very tempting target for the pullback. And there is a breakaway gap when we saw a move from 23rd, 24th of June above the previous highs that were set on the 11th of June. We gapped to new highs, but not yet to records. And then finally we went to records just a few days ago on 27th of June, last Friday. However, this final gap between the 2nd of July and the 3rd of July, yesterday, I think could be what's called an exhaustion gap. So notice this gap up, so no prices, no trading occurred there. Why is it an exhaustion gap? Because I think we are at the top of the range, and it's pretty obvious. We moved from a low in April 7th of this year from 4,824 points to a high of 6,260 or so. So a very, very large move. Like I said, it's close to 30% move. And these types of moves for an index is definitely, they're not common. They do happen on occasion, but eventually they will exhaust themselves. And I think that we're kind of getting close to that level where an exhaustion gap could indicate a top. Now, that's just one part of the puzzle. There is absolutely no way to tell how far any particular move would take us. And in fact, I have already shown, I believe, this chart on more a weekly time frame. So this just shows the entire freak out from February of this year until the low in April of this year, until new highs that were set just this few days ago in June. So this is a V-shaped reversal, very powerful V-shaped reversal. And I mentioned that when we have this type of reversal, we can look at the depth of this pattern. So depth of this pattern between the high and the new breakout is about 1,300 points, or in this case 27%. Can we see a move of similar magnitude to a new records, and it could just continue higher? Sure, it's entirely possible. So last week I projected a very optimistic scenario where we simply continue higher, and before the end of this year we get to 7,400. So another 21% move off today's price levels. Can it happen? Sure. Has it happened in the past? Yes. How likely is it to happen? That's a different story. I mean, it has happened in the past. So this is the reason why I'm kind of paying attention to this little gap right now, the exhaustion gap. We might maybe move a little bit higher, but I think a pullback is really very close. And ideally, of course, an ideal scenario, this pullback would be like a welcome sign. And if we do get a pullback, I think a very good target for it would be around this blue support resistance line, which would constitute a pullback of about 9%, 8.5% to 9%. A very normal kind of scenario. So currently that level is marked by the blue line around 5,740, and as I just mentioned, these two gaps there are also quite, very good targets to for the moves, for the backtracking of the index. So this is the gap between 9th and 12th of May, and then another kind of small gap here between 23rd and 27th of May. So these two gaps are very likely to get filled. I mean, of course, before we get there, we'll need to fill this exhaustion gap and then also this little tiny gap between 24th and 25th of June. But, if this type of gap filling doesn't fold and we do pull back towards the blue line, that would be a very good buying opportunity. And of course, we will, when we get there, the subscribers and you guys here listening to me on the YouTube will be the first ones to know. So right now I'm looking at this exhaustion gap, and also I'm looking at some of the other indicators that I follow, and I cannot help but wonder if this is it, at least for now. And here is that other indicator that I do follow, and this is New York Stock Exchange Composite advances less decline issues. So how many stocks moved up, and we subtract from that how many stocks moved down, and we get a number every day. And then after that we take a 10-day exponential moving average of of that number, and we get this kind of curve. So currently that level is the most overbought for, well, let's just go back and see how far back. So about close to a year, I would say. So this level is about, I think the last time we got these levels were in September of 2024. So about 9 months or so. So we are pretty overbought, not like extremely, but very overbought currently. And a pullback is quite likely. Now, of course, it's not a linear process. And for example, notice here on 24th of April 2025 this year, we also hit pretty high level, and then this indicator started pulling back. But notice that the stock index itself, S&P 500, continued higher. So this indicator is not foolproof. However, back in April, notice that we were next to the lows. And now we're actually at all-time highs. So no matter how you slice it, the index is overbought. The breadth is also overbought. That's why I'm fairly certain that we're pretty close to at least a small pullback. Small pullback could at least fill this gap that I'm referring to from 24th to 25th of June and touch this green line. But a deeper pullback, like I already described, could get us down to this blue line and around the about 9% move to the downside. And again, at that point, most likely it will become a very good buying opportunity. So we are definitely staying on top of things. We're monitoring not only the action on the stock itself or S&P 500 itself, but we're also monitoring the market breadth, or how broad this advance is. And right now, I think this advance is getting kind of close to an end. So we will keep an eye on it, but for now, let's enjoy the ride. And I wanted to mention at least one of the trades we recently did, and I personally still have a position open, and that's in Boeing, ticker symbol BA. So again, giant company. How did I know this company turned around? So initial breakout right there on the 21st of March actually failed because we again moved towards new lows and closed below the yellow line. So whenever a stock closes below the yellow line, that means we're no longer in an uptrend. Okay, so I'm currently talking about stocks and non-leveraged ETFs that are not tied to commodities. All right, you're with me? So if you don't trade UNG, don't trade USO, like the oil fund with this indicators. But if you want to trade stocks or ETFs, such as not leveraged ETFs like S&P 500 ETF SPY, you can use my indicators. Okay. So we're looking at Boeing right now, and so this initial breakout that occurred. Actually, it occurred even a little bit earlier, but then we held support here. So initial, very first breakout of the latest bull market for Boeing actually occurred on the 6th of February. We had a very deep pullback, got back almost to the yellow line, but held on support and then broke out again on the 21st of March. However, that second breakout did not hold because the entire market just unraveled. Then I was looking at this, this chart, and I was like, okay, this is it. This is definitely the end of the bear market for Boeing. And on the 23rd of April, I went ahead and I personally bought this position. I personally opened the position in Boeing because we closed above this blue support resistance line. And again, if you're trading with my indicators, that's actually all you needed to know. All you need to know is that the security closed above this blue support resistance line. I went ahead and I opened the position with a initial target of around this green support resistance line. On the 2nd of May of this year, 2025, my target was reached, and I moved my stop to entry, and then as you can see, this blue line continued to move higher. So currently my stop is actually at the blue line. And notice that the price action is pretty far away from the stock price itself. Rather, my stop is actually pretty far away from price action. The reason for that is because we can see pretty significant fluctuation. Like, for example, this move from 9th of June towards 13th of June was pretty significant. And if my stop was at the green line, pretty close to the price action, I would have been stopped out. But my stop is actually at the blue line, so I'm pretty far away, and my position is still open. And it does look like we're going to break to new 52-week highs. So this is the essence of how I trade and how we trade at Master Charts Trading. All you need is these 4 indicator lines, and you can find out more about how to get them by going to my website, Master Charts Trading. You can have the same lines on your chart for tradingview.com. Again, very easy to set up. Don't be afraid. I can explain everything. Just send me a message, send me an email. Let's move on. Currently, we're looking at euro versus US dollar. So it's a currency pair. The way forex traders, foreign exchange traders, or forex traders trade currency pairs, the currencies are not traded in a vacuum. You need to have 2 currencies to trade against one another. So in this case, we're trading euro versus US dollar. Euro on top, US dollar on the bottom. So in this case, clearly euro is very much winning the this battle. Interestingly enough, on 3rd of February of this year, I wrote here possible bottom. Indeed, it was possible bottom. So, if you bought euro at the possible bottom of about $1, and currently it's $1.17, that's a sweet move. However, of course, we didn't. But this actually was an alert right there, where I'm hovering on the Thursday, 13th of March. So if you indeed bought euro on this day, you're up a staggering 900, close to 1,000 pips. So remember, this is a leverage trade. So if you're trading using the normal forex leverage of like sometimes 1 to 6 or 1 to 9, then this is a big, really, truly gigantic move in your favor. Currently, I think we're kind of getting to this. This rally is getting, as they say, too run away. So why? Okay, so let's look at the dollar currency index. So dollar currency index, also known as DXY, moved to a three-year low, and bounced a little bit so far. So I think that again, this is a very overextended security, and for forex to move in such a huge manner is quite unusual. So I think dollar is definitely somewhere close to the bottom, and if it does indeed rally, I mean, also another point is that there is a couple of gaps above here. There is one right there between 23rd of June and 24th of June, another small one between 25th of June and 26th of June. So definitely those gaps will be filled, and most likely very soon. So that's why I'm saying dollar could be getting close to a bottom here. Why do I care about dollar? Because of another currency pair that we trade, which is gold versus US dollar, XAU divided by USD. So up to very recently, gold has been winning this battle, hands down. We've been trading gold. Notice this up arrows. Basically, every time we touch the blue line, we buy. Every time we touch the blue line, we buy. The latest move was just gigantic. It went from 2,000 all the way to like 3,500 almost. Right now, and it's sort of stalling right now. So, I mean, it's still in a bull market, still in an uptrend. But as I'm saying, if dollar has indeed bottomed, then gold will fill this, and perhaps gold is already filling it, because I don't see new highs for gold, yet I see new lows for the dollar. Notice that we broke two new lows on the 26th of June, yet gold actually pulled back in the same time period. Here's 26th of June. We're not nearly close to new highs. I mean, we're sort of close, but we're not at new highs, whereas dollar is at new lows. So that's the reason why I think dollar may have bottomed and gold might be pulling back pretty soon. So basically, since more or less April of this year, gold has been trading sideways. There was not really new highs, but also has not been pulling back much. So I think there is a very good chance that now is the time, and the pullback of around 8% might be just around the corner. Will it actually happen? That's a different story. So let's, again, watch and see what happens. But the way the dollar and the way the euro is behaving makes me think that there is quite a good chance that dollar has bottomed and gold will pull back pretty soon now. And that's it for this week's recap. Many more stocks will be covered in the members only section. Notice that the junk debt, interest rates, Treasury bonds, Bitcoin, oil, a couple of Forex securities, New Zealand dollar and Australian dollar, as well as many ETFs. And large cap stocks, etc., and the speculative securities will be covered in the members only section. So if you're not yet a subscriber, consider signing up by going to the link in the description and then follow it to the masterchartstrading.com website. Again, I have the trading indicators, so you can trade pretty much anything under the sun. You can trade on multiple time frames. Normally I trade on daily or weekly time frames, but yes, you can trade on even minutes, like for example 30 minutes time frame. So this will be gold on 30-minute time frame. You can buy right there around the blue line and move higher. There's another breakout and then move higher. So yes, you can trade on intraday charts. However, you have to understand that the more intraday you go, the more there are going to be false signals. And vice versa, if you go to daily or weekly charts, there will be much less false signals. So yes, I would consider trading on much higher time frames, such as daily or weekly. So these are the indicators, the trading indicators. They're available for tradingview.com, this tradingview.com interface. Open a free TradingView account, come back to my site, Master Charts Trading, sign up there, and I will open the door for you so you can see the same charts, same lines on your chart. If you're not yet a subscriber, consider signing up by going to the newsletter part. So the newsletter, again, I send out daily alerts about various securities, as well as weekly members-only videos about the various securities. So definitely consider signing up. I have several recent subscribers who are quite happy with the gains they're getting because of you can see we have quite a bit of securities that we trade, so you can pick and choose. You can trade ETFs, you can trade large cap stocks. It's quite a bit of various securities such as speculative securities, as well as gold related. Of course, the best deal is to get both trading indicators and newsletters, and right now you can get them at $49.95 per month, which is 20% off the equivalent price of monthly subscription. That's it for this week's recap. If you have any questions, please leave a comment, share this video, like this video. Thank you for watching, and have another great trading week. Bye-bye.